Welcome back to another weekly analysis, you guys. As you can see on the monthly time frame, we've had two very bullish candles going to the upside. And so when we work our way down to the weekly, we already know that price is in an uptrend. Price is in an uptrend, and it's been in an uptrend for a very long time. So what we want to do is we just want to follow that by adding our trend lines so that we can keep up with the flow of the market. And I like to place my trend lines up until the point where price can't connect anymore. So as you see, I'll be adding about 3 different trend lines on the weekly time frame, and that's just so that I know all the points in the market that price has respected. And also, if price is to break any of these trend lines, I could know where to expect resistance at. But as you can see with each of these trend lines, price has touched the trend line at least twice. And that's what you want to do. Put a trend line where price has touched it at least twice in the market. So I'm going to go down to the daily time frame. And on the daily time frame, I'm just going to start to gather where is my support and resistance at within the market. My support and my resistance is going to tell me the prices that price has been at and where it respected in the market, where it stalled out, and things like that. And so with having my support and resistance marked up, it lets me know where I can expect price to go and where I can expect it to have trouble at. Same thing with those places. You want to make sure that the market has touched at least twice for you to consider something a zone. And all a zone is support or resistance. It could be a trend line. It's any place in the market where price has tapped at least twice, and you can consider it a level of interest. So if you kept up with last week's trading analysis, then you know we were waiting for price to come in and break that counter trend line so that we could catch a move to the upside. Now, the complete move that we're waiting to the upside is sitting at about $55 to $56 an ounce. However, price is only currently sitting at about $52.78. All you see me drawing up is the place in the market where last week price just kept coming up and coming down, coming up and coming down, and it couldn't break past that 50.99 area on the chart that's marked up, but we'll just call that 5100. That area, it had a real struggle breaking, meaning until price is above that, we don't want to get in any buys. Or until price has broken our counter trend line, showed a form of a retest, and then continued with upward momentum. And that is how I got into my trade for last week. I will go over that a little bit at the end, but if you want to see the full breakdown of last week's analysis, you'll just have to go back and watch that video. And what I've marked up with the blue circles is just showing you guys where the higher highs and higher lows have been created within the market. You see me adding this trend line because I see another place in the market where price was kind of respecting another trend. It's still in the uptrend, but it's respecting another trend line at this point in time. And so I'm just adding that. So if price wants to reject or retest any areas, I can have a current area in the market where I can look to or expect price to come. So you can see the last daily candle in the market was very bullish. It was very engulfing. Not only was it very engulfing, it broke past those last 2 daily candles, just eating them right on up. And then the 4-day candle, it just powered above all of those candles. So that shows us buyers are still in the market. They're very much there, and we can expect them to make price continue in an uptrend in this upcoming week, especially with all the things Trump has done over this past weekend. If you've watched the news, if you know, you know. You guys will have to look into that on your own. I don't get into the politics, but I'm aware of the politics. So with all the things in mind, what I would be expecting price to do is to break above the pink trend line that you guys saw me take place, and then come back and retest that and continue up to that 55 to 56 area in the market. Now, when price does that, we can definitely expect a power rocket to the upside, because when we look to our left, we don't see a lot of consolidation. We don't see a lot of side to side movement in that area. We see price, when it previously went to 55, 56, it just went straight there. It didn't consolidate. It didn't do none of that. And when it came down from that level, it came straight down. So that tells us this is probably an area in the market where the price will not just sort of trickle up. It'll go up some, come down, then it'll go up some, then it'll come down. Granted, the market can do whatever it wants, but looking to the left tells us what type of moves previously happened and what can potentially happen where we're looking to get into our trade. And knowing what we're looking for when we get into our trade is key, because we don't want to take any losses that can be prevented. So when marking up your charts, you want to make sure that you're looking at the overall picture of things. You don't just want to look at one time frame and just take that time frame as the overall picture. Because as you can see, knowing that price consolidated for those days around the 5100 area and the 4800 area, where it just kept going up, going down, going up, going down. It wasn't really going anywhere. It wasn't going up and it wasn't going down. It was kind of just consolidating in that area. And now we've got a break above that. Price is very bullish right now on that daily close. And not only is it bullish, it broke past those two daily candles that were very small. They didn't really do anything. So that tells us a lot about what we can expect in this upcoming week. Now, as I said before, looking to the left, we know that this is going to be a trade that has a lot of momentum, and we should really be looking to get in at a good entry price, because when trades look like this, bankers know that traders are going to be getting in exactly where the traders are placing their stop losses and things like that. So don't be falling, prey to what the banks want you to fall prey to. When price breaks and it retests, you look for your buy to the upside, but you want to place your stop loss a little below the area where you would see most retail traders place it. Or you will want to wait for a deeper pullback than the area I'm showing you. Instead of, let's just say 5250, we'll call that. Maybe you look about the 5200 area where price broke out of that area of consolidation that it was in on the 4-hour, and it just decided to skyrocket up. That would also be a good area to be looking for entry. Now, because we know all of this, we want to use it to our advantage when looking for trades next week, because we see where price did eventually break our trend line. It consolidated, it retested, and it continued to the upside. Now, if you made money last week, definitely leave me a comment below. Tell me how the breakdown helped you, what you were able to gather from the market, and if I helped you understand anything or things you didn't know before, because it always helps me to know when I'm actually helping you guys and what you need to know as far as being a trader. Now, the price where I got in the market was about 5100, and I got in because I saw price broke our counter trend line. It broke the counter trend line, and then it came and retested the area that it broke out of. And so after it retested, we had kind of had this side to side movement, and I got in right about 51.20. And I got out of the trade at about 52.75. I could have held this trade, but I didn't. And so definitely let me know if you guys made money. If you like these weekly analysis, don't forget to give me a thumbs up and also subscribe to the channel, because why not?